Stocks struggled to hold on to gains, dollar bulls remain in control. Global stocks were mostly indecisive at the start of the week, with investor sentiment looking mixed across the globe. In Asia, Japan's Nikkei 225 gained after the preliminary economic data showed that the Japanese GDP contracted 0.8% in the third quarter compared to the previous quarter. However, the economy grew by 1.4% compared to July-September 2020. Following the report, Bank of Japan Governor Kuroda noted that a weak GDP was likely due to a consumption slump in September. However, equities climbed later, cheering a virtual meeting between US President Joe Biden and China's President Xi Jinping that triggered a risk-on tone across the markets. Biden said that US-China relations are profoundly important to the world, while China's Xi noted that he stands ready to move US-China relations in a positive direction. In Europe, equities climbed to fresh all-time highs on Tuesday amid a weaker euro following dovish comments from the ECB governor, as Lagarde said that conditions for a hike are very unlikely to be met in 2022. On the data front, the UK ILO unemployment rate declined to 4.3% in September from 4.5% in August, while the average earnings including bonus rose by 5.8% in September, surpassing an estimate of 5.6%. As for the key data, the US retail sales soared 1.7% in October, the largest gain since March, and above the 1.4% estimate, the official report showed on Tuesday. Other data showed US manufacturing output surging to a 2.5-year high last month. US stocks rose amid the data, while European equities were mostly lower, with the UK's FTSE 100 leading the losses, while the sterling jumped to a one-week highs after the report showed that UK inflation soared to 10-year highs in October, raising odds for a rate hike by the Bank of England in December. The UK Consumer Price Index surged in October to 4.2% year-over-year, having exceeded both the previous estimate and the expected result. On Wednesday, Wall Street stocks fell amid resurgent inflation concerns. The Dow Jones Industrial Average fell 0.5%, the S&P 500 slipped 0.2%, and the Nasdaq Composite lost 0.3%. The Dow dragged down by a nearly 5% drop in Visa after Amazon said it will stop accepting payments made with Visa cards issued in the UK starting next year. Asian stocks followed Wall Street lower on Thursday amid reports showing a rise in coronavirus cases in several countries in the region, while a drop in crude oil prices added to a more downbeat tone in the markets. Earlier in the session, there were reports that China's Evergrande unit to sell all of its shares in Hengsten as the troubled company seeks to raise funds to pay debts. The sale accounts for around 18% of issued shares of Hengsten. In currencies, the dollar rallied to fresh yearly highs after another boost received by the US retail sales data. The euro-US dollar pair dripped to fresh mid-2020 lows around 1.1265 before trimming losses. The euro was last seen flirting with the 1.1300 figure, staying just slightly off long-term lows, with downside risks persisting in the short term despite oversold conditions. Meanwhile, crude oil prices declined sharply on Wednesday amid the reports that the Biden administration might consider releasing more oil from emergency reserves, while China said it was moving to release reserves following a report that the United States was asking big crude oil consumers to consider a coordinated release of stocks to lower prices. Against this backdrop, Brent crude plunged below the $80 figure to $79.60 region for the first time since early October. In other markets, Bitcoin price has been losing ground since the start of the week. On Wednesday, the BTC-USD pair dipped to November lows around $58,300 before bouncing marginally. Still, the largest cryptocurrency by market capitalization struggles to regain the $60,000 psychological level, also staying below the 20 DMA, today at $62,700. In the short term, the coin will likely stay on the defensive as bearish risks continue to persist at this point. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.